Welcome back to the channel. I'm Algabot, and today we're breaking down an expert advisor for MetaTrader 5 called Ignition Bar Breakout. This is a selective, momentum continuation strategy built around one simple observation. Big directional moves usually begin with a single, decisive candle. In this video, you'll learn how the strategy defines that candle, how it uses a moving average trend filter and the average true range to manage risk, and how it waits for confirmation before ever committing to a trade. Everything here is for educational purposes only. It is not financial advice. So let's dig in and see how it works. Let's start with the big picture. Ignition Bar Breakout is a momentum continuation system, which simply means it tries to join a move that is already underway rather than predict a turning point. It runs on a single time frame, whichever one you attach it to, and it was designed with liquid instruments in mind, such as major currency pairs, gold, or index products, on the 15-minute through 1-hour charts. The core idea is the ignition bar. The strategy is looking for one candle that does three things at the same time. First, it expands. The candle's range has to dwarf the recent average range, so it stands out as a genuine burst of volatility coming out of quieter conditions. Second, it commits. The candle must be a real body, not a thin wick, and it must close hard at one end of its own range, showing that one side finished firmly in control. Third, it aligns. The candle has to agree with the prevailing trend, which the strategy measures using a 50-period exponential moving average. We join momentum, we do not fight it. Two indicators do the heavy lifting. The exponential moving average defines the trend direction, and the average true range, or ATR, measures current volatility so the strategy can size its stop distance, its break-even point, and its trailing step in a way that adapts to the market. Now, a single strong candle is not a trade on its own, because plenty of wide bars simply stall. So this strategy never chases the close. Instead, it places a resting stop order just beyond the candle's extreme and waits. The market has to actually break past that level within a few bars, or the order is canceled. This confirmation step is what filters out false starts and keeps the trade count low and clean. It's a patient, rules-based approach suited to traders who prefer selectivity over constant activity. As always, trading involves risk, and losses do occur. Let's walk through the exact logic, step by step. After each candle closes, the strategy first measures the average range of the recent bars, using the average range period parameter, which defaults to 14. It then examines the candle that just closed and asks whether its range is at least the expansion multiple times that average. The default multiple is 1.8, so the candle has to be nearly twice the size of the recent norm to qualify as expansion. Next comes the commitment test. The strategy divides the candle's body by its total range. If the body is smaller than the min body frac, which defaults to 0.55, the candle is rejected as too wick heavy. It also checks where the candle closed within its own range, using CloseLocMin. For a long setup, the close must sit in the top portion of the range, near the high. For a short setup, it must sit near the low. Then the alignment test. For a long ignition, the close must be above a rising 50-period EMA. For a short ignition, the close must be below a falling EMA. Only when expansion, commitment, and alignment all agree does the strategy act. Now, instead of entering immediately, the EA arms a resting stop order. For a long, it places a buy stop just above the candle's high, plus a small ATR buffer. For a short, it places a sell stop just below the candle's low. If price does not reach that level within EntryExpiryBars bars, which defaults to 3, the order is canceled and the setup is abandoned. Risk is engineered carefully. The stop loss sits inside the ignition bar, a fraction of its range back from the extreme, set by stop depth frac. If that implied risk is larger than max risk TAR times the ATR, the setup is rejected outright, so overextended candles are never chased. The take profit is placed at a reward-to-risk multiple, defaulting to 2-to-1. Finally, once price advances by the break-even ATR distance, the stop ratchets to break-even and then trails by the trail ATR distance, managed on every tick, so a healthy move is protected as it develops. Let's read through the actual MetaTrader code. At the top are the input parameters you can adjust in the strategy tester. Average range period and expansion multiple define how much bigger the ignition candle must be than the recent average. Min body frac and CloseLocMin control the body strength and where the candle closes. EMA period sets the trend baseline, while stop depth frac, max risk ATR, and reward multiple shape the risk and reward. EntryExpiryBars is how long the resting order is allowed to wait. Now look at the long block. The Boolean bull ignition is true only when the close is above the open, when the close location value is high enough to sit near the top of the range, when the close is above the EMA, and when the EMA is rising. If all four are true, the code computes an entry just above the candle's high and confirms it is genuinely above the current ask. The stop loss is placed inside the bar using stop depth frac. The risk is measured, and if that risk is within the ATR cap, the take profit is set at the reward multiple. Then trade.buy stop arms the resting order. The short block mirrors this exactly. Bear ignition requires a bearish body, a close near the low, a close below the EMA, and a falling EMA. The entry sits just below the candle's low, the stop loss sits inside the bar above it, and trade.sell stop places the order. Both sides are fully symmetric, and neither one fires unless the market confirms the break. Let's walk through this chart candle by candle and see the strategy in action, first on a long trade and then on a short trade. The blue line running through the price is the EMA trend baseline, and it's the reference the strategy uses to decide which direction it will even consider. On the left, notice the first three candles. They're small, quiet, and tightly packed, with the EMA baseline drifting gently upward beneath them. This is exactly the kind of calm backdrop the strategy watches, because a burst of energy stands out most when it comes out of stillness. Then look at the fourth candle, the one marked as the ignition bar. Its range is far larger than the small candles before it, so it passes the expansion test. It's a strong bullish body that closes right near its own high, so it passes the commitment test. And its close is clearly above the rising EMA baseline, so it passes the alignment test. All three conditions agree, but the strategy does not chase that close. Instead, it arms a buy stop just above the ignition bar's high and waits for confirmation. On the very next candle, price pushes up through that level, and the buy entry marker shows where the resting order becomes a live trade. This is the key point. The market had to actually break past the ignition high before any commitment was made. The stop loss sits back inside the ignition bar, and the take profit is set at twice that structural risk. From there, price runs higher over the following candles, and as it advances, the stop is lifted to break even and then trails behind. The move reaches the take profit target, and the long trade is complete. Now watch the market roll over. After the peak, three candles push lower and the EMA baseline bends over and starts to fall. The backdrop has flipped from up to down. Then comes the 11th candle, our second ignition bar. This one is a wide bearish candle that closes down near its own low, and its close is below the now falling EMA. Expansion, commitment, and alignment agree again, this time to the downside. Just as before, the strategy doesn't sell on that close. It arms a sell stop just below the ignition bar's low. On the next candle, price breaks down through that level, and the sell entry marker shows the short trade going live. The stop loss sits inside the ignition bar above the entry, and the take profit again sits at a reward to risk multiple below. Price then slides lower over the following candles. The stop ratchets down toward break even and trails, and the move reaches the take profit target, completing the short trade. So across both trades, the pattern is identical and fully symmetric. A quiet stretch, a single decisive expansion candle aligned with the EMA, a resting order beyond its extreme, and a real break required before commitment. That confirmation step is what separates a genuine ignition from a candle that simply fades. Of course, not every setup plays out this cleanly. Some breaks fail, some orders expire unfilled, and losses are a normal part of any strategy. This illustration shows the intended logic, not a promise of how the market will behave. That brings us to the end of our look at Ignition Bar Breakout. We covered the core idea of the ignition bar, how it must expand, commit, and align with the EMA trend, and how the strategy waits for a real break before it commits with a resting stop order. We also walked through the structural stop loss, the reward to risk take profit, and the break-even and ATR trailing that manage each trade. Remember, Everything in this video is educational information only. It is not financial advice, a recommendation, or a solicitation to trade, and every strategy carries real risk. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like me to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.